What's going on, YouTube? I wanted to start this video off by welcoming you all to my channel. My goal with this space is to help others level up and become self-sustaining, profitable day traders. So I'll be sharing insights and things that I've learned during my journey as a full-time day trader in hopes that at least one of you finds something valuable that you can apply to your own day trading. However, keep in mind that I am not a financial advisor and none of what I'm about to say is financial advice. But let's get started. So in today's video, I wanted to go over a topic that I'm extremely passionate about, not only because it was game changing for my trading, but also because I feel like the majority of traders today don't completely understand it or fail to implement it successfully into their trading. And that's trading with narrative. So I've been seeing a lot of traders posting losses and wondering where they went wrong. And more often than not, the screenshots they're providing show them on lower time frames like the 1 minute. Now, there's nothing inherently wrong with trading off of the 1 minute, but the problems come when you only trade off the lower time frames without any context or narrative formed. So what this means is that typically they'll see an entry pattern on a lower time frame and jump in because it checks all the boxes of their entry model. But they're still losing these trades because there probably wasn't any higher time frame confirmation to support their trade. So when you trade ICT entries alone, especially on lower time frames, you're essentially just trading patterns, and that typically won't work out in your favor in the long run unless you're just extremely lucky. Now, unless you're a true scalper where you're looking for really quick point moves, you really shouldn't be living on the lower time frames. Before entering a trade, you should always be analyzing where price is trying to go from higher time frames to increase your chances. So let's take a look at a recent example from last week. All right, so we're looking at NQ here on the 1 minute. This is basically about when it's about to open, New York opens. And you can see that we have a nice little run up in the AM right before the silver bullet hour. We actually end up taking this buy side right here, potential buy side liquidity up here. And then we also have resting liquidity at London highs up here. So buy side liquidity right here. So we got a nice little run up. These are potentially areas where we could potentially see some sort of a retracement or reversal. And this is all on the 1 minute. So we see this happen, right? If we were watching this live, we're watching a massive displacement. We also have this 1 minute bullish fair value gap that's basically getting run through. And this candle actually ends up closing beneath it. So with all things said, this looks like a pretty good short or a good setup to go short, right? So you might be saying, well, that's the candle that starts to retrace back up. So let's say you are looking for some sort of a short entry here. You want to wait for, let's say you want to wait for premium, and you have this volume imbalance here that you might want to just, take a quick trade off of with the, let's say 20-point stop, or you can even go up to here. And you want to aim for this. So it's a little less than, 2RR, but it's just for this example. Typically, you want to have your stop at or near at least the candle high of the imbalance that you're trading. So let's say the trade is set up this way, and the price keeps moving up, and you get tagged in, right? So let's see what happens after, right? So you get a nice immediate reaction to the downside once you get tapped in. Things are starting to look pretty good. You get this massive candle down. But it's not at your target yet, and this is, I think, in my opinion, this would be the minimal target if you're truly bearish. And then maybe you could bring your stops to break even once it breaks that low. But we haven't even hit that swing low yet, so we're still waiting in on this trade. And now you start to see it reverse on you, right? And you even actually inverted this this SIBI right here, this bearish fair value gap. right? So that's not a good sign. Right now you're seeing a little bit of accumulation. We're in the silver bullet hour. May have even just tapped into that inverse fair value gap. And we get stopped out. So why did this happen? It's really because on higher time frames, we're still bullish. Higher time frame order flow is bullish. Now, if you zoom out, you'll see that this displacement down on the lower time frame was actually just a retracement into a bullish fair value gap on the 5 minute. You can see, let me just get rid of these. We have a 5 minute bullish fair value gap here that got tapped in and completely moved to the upside. Not only that, if you zoom out to the daily, you can see that we tapped into this daily volume imbalance and delivered price from there. And then if you want to zoom out even more, you have this weekly bullish fair value gap that, I mean, it already tapped into once, but it tapped into again, respected it, and is delivering back up to take out external liquidity. So there really was no real reason to look for shorts. Until you look for higher time frame confirmation. Right, so if there is nothing on higher time frames that indicate that there is some sort of a reversal happening or a retracement, large retracement, then there really is no reason for you to go short. But you can't see that if you're stuck on the lower time frames. So the moral of the story is start zooming out to see the bigger picture. You need to have higher time frame support and alignment with your trades in order to find yourself on the right side of the market. So start on at least the daily or the weekly charts and try to figure out where price is headed to next. That is your draw on liquidity. You can drill down into lower time frames to figure out how price will deliver to that draw on liquidity, and then you can start looking for entries on the lower time frames. So I hope this video was helpful. I know it was a little bit shorter, and I hope it was helpful in some way. And if it was, make sure you like the video and subscribe to the channel so I know to make more of these in the future. And also, if you have any questions, go ahead and drop them in the comments below, and I will try to get to them when I can. And if you want to come learn and trade with me, I also have a Discord set up where you'll get direct access to how I analyze and trade the markets. I'm not a perfect trader by any means, but I'll do my best to help out however I can. So good luck, you guys, and see you guys next time.